This is episode 1103.
What are the use cases where I can actually use AI and it really works? And second, what's my ROI on it? And unfortunately, especially the answer to the second one has always been a slightly unsatisfactory one. For tools like MindBridge, and I come back to us because it has been a big part of what we needed to learn and work on with our customers, is also how do we actually measure ROI of your tool? Because, and that very much resonates with me. I'm the first one, to ask for clear ROI on tooling from my peers. So I cannot be the one who's implementing costly tools and not have that at hand or not develop that for my own tooling. And so at MindBridge, this is very much, we've done a lot of work around value engineering and actually understanding how our tool impacts certain, we call them use cases, and what's the ROI on our use cases. And now we're actually at a point where we have built, we call it a Use Case Navigator, which is an easy way to approximate usually it's savings or top line impact that the deployment in a specific company can actually deliver.
When Matthias Steinberg stepped into the CFO office at MindBridge in 2022, the audit files displaying on his laptop were being engaged and monitored by the company's very own technology. KPMG was using the same technology as well to automate journal entry testing, where traditionally done manual. The monitoring underway was a big step towards continuous audit, or so Steinberg tells us. The technology, he explains, monitors all relevant financial flows for two primary audiences. External audit firms use it to surface anomalies with machine learning speed. Enterprise finance teams deploys the same software as a monitoring cockpit, one that flags vendor overcharges, payroll errors, and revenue leakage. You'll hear about MindBridge's two constituencies and much more on today's episode. Our talk with CFO Matthias Steinberg begins after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus back to customers in business building rewards. Make every dollar count with Brex.
Hello, we're speaking with Matthias Steinberg, CFO of MindBridge. Matthias, welcome.
Thank you very much, Zach, for having me on.
So, Matthias, we always begin by asking our guests to look back, prodding them to look back, so we can identify some of those experiences with them that they feel prepared them for the role of finance, the role of a finance leader. What would come to mind for you?
So I clearly have had a non-traditional path to becoming a CFO. I studied mechanical engineering, started my career in strategy consulting with BCG. Then after an MBA, I went to London and worked in private equity for a few years, working for Summit Partners, doing growth capital investments. And then really decided I wanted to be an operator, joined a startup that I, during my MBA, had helped co-found, later joined a scale-up. That was a company of about 2,000 people, where for the first time I was really senior management in a rather complex setting. And that then led to the first, real CFO job at IONOS, which was 2017. Which was a company at the time of about 700 million euro. At the time when I was brought in, Warburg Pincus had just invested, and I was part of basically a 5-year stint to do the full private equity cycle as the CFO of that entity. And so I must say, while I was exposed, of course, to many finance topics, starting with private equity because it was an investment angle. And then in that scale up, I was constantly working on finance topics, from financing the business, from cost management, from cash management. There were many, many topics I was involved in, but it took me a while to really get to that first, full focus on finance, which was, after well over 10 years into my career.
Tell us something more about that BCG culture.
Yeah. So I think one thing that's unique to BCG is the ethos and the way problems and projects were approached was there was not the culture was to literally start with a blank slate of paper and develop a very custom, very situational solution to the problem. And this was opposed to what, at least at the time, I understood McKinsey was very good in at just deploying frameworks and deploying proven solutions, right, or proven methods to solving problems, which of course I think both has advantages and disadvantages. Right. And so the BCG ethos really was: you start with a blank slate of paper, you put motivated, smart people in a room, you work with a client, and by doing that, you have the chance to come to the best possible outcome for that, specific problem and the specific client. And I think sometimes that was certainly the case. Other times it felt like we are reinventing the wheel unnecessarily all the time in places where it doesn't really create that additional value. So I think I came away thinking I love the culture and I love the people and I loved the problem-solving aspect of it. And that generally I think it was a very good start to learn how to break down problems and how to solve problems.
Do you think it informed you going forward? I mean, even as a finance leader, some of what the approaches involved there, do they inform your leadership today in any respect?
Yeah, I do think so, and we'll touch up on that a little later as well. Okay. And I think what are qualities that can make me a better CFO and a better strategic CFO. But being able to problem solve, break down problems is and create, like, have the ability for creative problem solving is something that I think is very high on my list. And BCG was a very good start. It was a very, almost blue chip apprenticeship in problem solving that I received for the first few years of my career. And then I had another stint at this scale up in Germany, where I worked still with the founders, and where I also saw an incredible capacity for creative problem solving in these founders. They had basically built a 500 million euro revenue, 2,000 people business, profitable business, fully out of cash flow. They didn't have a single dollar of outside investment, and they did that with an incredible amount of creative problem solving skill that I also found extremely helpful in training myself, and those are qualities that I think today still are extremely valuable in my job.
I think you could have gone any number of directions. Investment banking, why not? Why didn't you head that direction?
So my career basically was I was destined to be very hands-on as an engineer. I started then at BCG, and I would say I continuously in these steps got closer to being an operator. I think in my heart, I'm an operator, and that's what I learned. BCG, I loved the problem solving. Over time, I realized I just don't want to do the analysis. I also want to solve the problem, and I want to see the solution through. Going into private equity for me seemed a step closer to being an operator, especially in a company like Summit Partners, where Summit was and still is quite focused on growth investing, on working with founders, with very successful founders, on maturing their businesses. And for me, that seemed like a logical next step. It had some of the features that I liked about BCG, And it added, it felt I was getting much closer to really the business, because we would be on the boards of the businesses that we were invested in. We'd be much more, and for a more continuous time, involved in working with the founders and management on these businesses. So that was for me that step. And then at some point I realized, but I really want to operate. And so that's when I went into the first, and jumped into that startup to really be an operator full time.
And what was the type of role that you stepped into?
So at the startup, it was 5 people at the time. So the title that I took was CEO, the founder, fully focused on developing the technology and also on the early customers. And I was doing pretty much anything you do when you're 5 people, a lot around business development, a lot around developing the market, talking to potential customers, working with existing customers to understand how our product was working or wasn't working at the time. Hiring, during my tenure, we went to 15 people. We did a little bit of fundraising, but it was very much around trying to figure out product market fit for that for the technology at the time.
And how large did that company grow during your tenure there?
So while I was there for a little over 2 years. We went from 5 to 15 people. We ran it close to break even. I would say, and in hindsight, we did reach product market fit. There was quite a shift from building actually a very early today it would be called artificial intelligence. At the time, we called it just, we are combining machine learning with cloud computing, which was very new at the time, 2006, 2007, when the company was founded. It was very much a black box technology for inventory optimization or demand forecasting in the beginning. And we developed a much more collaborative and consultative technology-enabled consultative approach to working with the clients on inventory optimization. The problem was much more complex, and that's really what I was part of developing. That's also what stuck. The company is doing very well today. It's still fully in founder hand, and I think it's like 50 to 100 people from what I hear.
Did you achieve product market fit relatively quickly?
No. The company was started in 2006, and I joined the company in 2011. I left in 2013. So the company, I think, was already 7 years old, and had some successes. There were some big customer names, but it still was very custom, case by case. It was a classic situation of an extremely talented and technologist and product focused founder who would always find people to work with him, and there were always problems that he could solve and that company could solve. But the question was, where's that scalable product that can be replicated and can be sold and can product/service that can really serve as a vehicle to build a bigger business. And I think that's literally what was developed, or that journey came to the first conclusion while I was there.
Is there any other lesson that you gleaned from that in terms of how to achieve it more quickly? What are the warning signs that we're not, it's going to take longer than we thought?
Yeah, it absolutely. And it sounds maybe a little bit cliche, but it was definitely something we did live through. It is listening to your customers and working with your customers on that. I do think that, I've worked a lot in founder-run businesses, and founders are a very special breed. And often, like there's with anything, the same qualities that can make you a very successful founder or make you a founder can also, have negative consequences. So being a visionary, wanting to do something very different, is often what actually is the impetus and the driving force for a founder to set up a business, to develop a technology. But where do you then listen to a customer and follow basically the customer's input, and where do you say, no, I don't? I actually want to be contrarian to that and contrarian to what I hear, because I know I can get to a better place. And I think in the beginning in the first few years, the company was probably, and the founder was a little bit too much on that extreme. And so I was starting to create that link. We had some early customers. I spent a ton of time on the phone. I was building literally the pieces that we were missing. I was building them in Excel. I was working with the customers, and that was then at some point informed the overall team how we can come to a product that actually starts working out for the customer.
Yeah. Are you communicating with investors as well during that period?
I were, yes,
Yeah.
exactly. It was friends and family, and then we did a small round of it was like a seven figure investment, more in the investor community. The business was based in Paris. It was like Parisian industrialists and entrepreneurs who invested. Yeah, and we did that with our own network. It wasn't a bigger fundraise. I did that in later businesses. I did actually several fundraisers with Jefferies or other investment banks.
And I'll mention to the listeners that I counted, I don't know, three CFO career chapters or appointments, as well as some CEO appointments along the way as well. So you have this interesting one of those CFOs who have also experienced the CEO role firsthand as well, and we'll be interested in hearing your opinions on that as you go forward. But what happens next? Take us, and then we'll look forward to learning about MindBridge, but I'm finding your path interesting.
Yeah. I decided to leave that startup, which was more a decision on the trajectory. The founder had a different trajectory in mind, and he really wanted to build a family business, and it was just not an alignment to what would fit to my career. And so so I decided to move back to Germany, and I approached the company that, while I was at Summit, was the one that got away. The Summit, Summit is a very disciplined investor with very clear investment criteria, looking for extremely successful founder-run businesses that have turned profitable. And I joined, and I basically joined one of those, the company with that profile in Germany. And that was it was the first time I was really managing. I would say clearly being in a 5 to 15 people startup was in its own way managing, but it wasn't a big organization. It wasn't a complex organization. That scale up was very complex, and it was large, sizable, and there was ample room to learn. And it wasn't really at that time. I was extremely thirsty for learning to operate and looking under the hood. And I was taking any opportunity I could to do that. So, for example, I got very involved in financial topics, as I mentioned. It was around, we were dealing with investors, we were dealing with banks, we were dealing with cash flow management, we were selling assets to raise funds, we were dealing with just general internal processes that just hadn't grown or weren't adequate for the size of the company anymore. I was dealing with the auditors, all at times. In the beginning, I did have a CFO title for a subdivision. Then I had the CEO title. But it was still very much jump in and grab the topics that were crucial at the time. And then I also tried to spend time and look under the hood wherever I could. It was a tech business, and for the crucial parts of the business. One was, for example, performance marketing. The company was spending, over 100 million in marketing costs, a lot on Google, a lot on performance marketing. And while I never ran our accounts, of course not, I was frequently in the Google accounts to see what was happening. I was spending a lot of time, and I would say the lunch meeting for me in my career has always been a super important tool. I would very regularly go for lunch with the guys who were running the accounts to understand what was going on. And so that gave me a very solid understanding how we were managing our campaigns. Another one was, we did have one subsidiary, which was an online travel agent for flights, at the time the biggest in Germany, that had problems, and it just wasn't run very well. The founders didn't have enough focus on it. And so I did have some time, so I jumped in, and for, I think, 10 months, I completely restructured that business. I basically became the CEO of that business. I was extremely operational up to the point where I was, owning the the prior meetings. We had 2 weeks with 5 Scrum teams and 2-week sprints, and I was sitting in the meetings and in the prior meetings and basically arbitrating what we're going to put into the next sprint. I did the introduction to computer science at Harvard, which was an online course they put online. So I went through that full experience, which gave me very solid understanding. It is the basics of what is going on in programming. And so at that time, I think I was very thirsty to learn how the business was operating and how these different parts was operating. I would say the last really relevant part for that business was also service. We had a very big service center, as you can imagine, B2C, selling travel. That was the last piece that I was very, very interested in. And so in that time, it was just like this very diverse apprenticeship in how to operate this business.
That's a great way of approaching a new role, thinking of yourself as an apprentice opportunity here to learn it. You're a networker naturally. Would you say you always excelled at that?
I would say no. I think let me say the following. I think I'm a very good internal networker. I think I'm an okay external networker. And so internal, and maybe if I take that example to IONOS, where the organization then again was much, much larger. So for example, one very simple thing I did that proved extremely effective, I thought, was I basically asked my assistant and at the time pre-COVID and said, every day I want to go for lunch with someone else. And we would literally take it by circles. I said, I want to go for lunch now with every single vice president that was on site. And then when we were through with those, I said, I want to go for lunch with every single one of my team members that are on site. In the beginning, they were frankly freaked out. Why doesn't it? So the poor colleagues, they needed to get used to that. I was just normal. I was doing that, and after a while, it just repeated itself. And then I would go for lunch. I don't know, for lunch with other groups of people in other teams. And I felt those 30 to 60 minutes were just this amazing mix of, you could talk privately and build a relationship over lunch. You can talk business. You can understand what they're working on. You can share what you're working on. And it really helped me to understand better the business, what's going on, and build relationships in a very organic way.
And at the same time, you had your assistant help you in this respect. It was mechanical. You put in something that would trigger it. It wasn't left to you to do. So interesting. Great insight. Great method. You're also a terrific listener, I bet.
It's really interesting. You mentioned that, and I concur with you. I think if I would have to name the most powerful skill that is also the hardest to implement, I think it's listening. Yeah. And over in my career, I have learned and experienced how incredibly powerful listening is if it's done right.
Yeah.
And listening is 2 steps. It's you cannot listen if you're speaking, so you actually need to literally not speak. And then it's also, while you're listening, really listen. And really, I think you can only listen really if you have a genuine interest in what the other person has to say. And if you have that deep conviction that listening is fruitful, and everyone has, especially if you ask the right question, has super good insights, and everyone in these companies, it doesn't matter in which position or which seniority, does have super interesting insights, that's when you start really listening and then processing it and putting it together, which will allow me to learn rapidly, to grow, and really make informed decisions, or form opinions and make informed decisions. Yes.
Is this the apprenticeship that really launches you into the C-suite? Is this where, it projected you?
I do think it's a big part of it. I think that there's 2 things. One is really, taking this apprenticeship approach and trying to learn as broad and as much as I can, not being too hung up on, and to a fault, I wasn't very strategic in the beginning about my career. I just wanted to learn. I just wanted to be in the action. I just wanted to look under the hood. And then the second is also, being a good learner. And that one big step of that is being a good listener and valuing the input from anyone that is willing to exchange opinions and engage in a good discussion.
When you do enter the C-suite, it is a CFO role, or is it another role?
Yes, it's it's called a CFO role. It was more of an operational role. It wasn't. It was a CFO of a subdivision in that scale up, the biggest and maturest company in OTA. I was interim CEO at the beginning. We were waiting for an industry leader to come in. So that was the first time I was running the company. That division had about 800 people. Had a management team of maybe 12 VPs. A very organic culture, still very founder focused. I was the first one, for example, to ask them to do an annual planning, create a budget, have strategy sessions. So those were all things that were new to run them, to implement them were new for me, were new for my colleagues. That was the first time I really assumed a role as a real senior executive. And then that step to IONOS, that's where I fell into the first time, or stepped into a very structured, much more mature, highly professional enterprise, that was at that 750 million mark. So in a very profitable, it was a mass market hoster. IONOS is basically a European version of GoDaddy. In the US, GoDaddy is about twice as big. GoDaddy is the market leader in Asia and the US, and IONOS is the market leader in Europe. And so it was already a very developed business. And so I needed to slot in as a CFO. I was owning all the CFO responsibilities, HR and HR, basically those two. Yeah.
And there was an IPO you were involved in, and forgive me, I don't have the specifics here, but was that chapter or was it another?
It was that chapter. So I came in 2017, was brought in. The company is owned by a listed holding company called United Internet in Germany, which is owned 45% by a German billionaire called Ralph Dommermuth. And he was on my board. So he initially, his holding company owned 100%. And then right when I came in, they sold a third to Warburg Pincus. So that was it was a German team based out of London. They did a very substantial investment in the company. And the task for us as a management team was, take this really very, very, this high quality business, as I said, sizable, very profitable, growing under ambition. It was a lower single-digit grower, while GoDaddy in the US was growing in the higher teens. So there was a big disparity, and our task was take it to 10% plus growth. Okay. It's a 3 to 5 year horizon. We need to grow at 10%, and then we take the business public. In the end, what happened was I was at 4.5 years. In my last year, we took it. We crossed the 10% growth, and we crossed the 1 billion in revenue. I'm now in Canada. I followed my family. We hoped that IPO would come within those 5 years. In the end, it was 6 years. So I handed over to my successor. It was clear the IPO was coming, but it was also clear I was going to Canada, and my board simply said we need to do the IPO with a CFO that is actually going to stay on. You cannot do the IPO and then leave. Which is probably one of my biggest professional regrets.
So close.
But on the other hand, it was great to see that the IPO, certainly from a technical perspective, went extremely smoothly. We were very well prepared as a company and as a finance function. And in the beginning, the stock had some challenges, and by now it has almost doubled from the IPO price. So actually, it's now really developing very well.
Well, okay, so let's find out about MindBridge. Tell us about this company.
Yeah, so MindBridge, we are a software and AI company. We build software, and what we have built is a financial decision intelligence platform. So As an example, we serve two markets. One is external audit. So KPMG uses our software in their audits to automate parts of the audit that traditionally is done manual. So they do journal entry testing, for example, with our software, which allows them to automate part of what they do, supercharge what they do, and really it's a big step. KPMG specifically speaking about continuous audit, and we are an important piece in that journey for our clients. We work with a number of the top 100 North American audit firms. And then we serve a second market, which is the enterprise market. And this is where we provide the same software in the form of a decision intelligence platform. Think a software that will monitor all relevant financial flows, and that allows finance teams to identify inefficiencies, problems, errors that directly translate to top and bottom line impact. So think, order to cash, where we have vendors that are invoicing the wrong amounts. Where are we paying vendors too early, too much? Where are we, and think about payroll. Where do we have errors in our payroll that are costly? Think about revenue leakage. Where are we, where do we deliver product or service to customers that we are not invoicing and not invoicing correctly? So it is really like a monitoring cockpit for financial flows in a depth and in a cadence that prior to AI and machine learning was just not possible to achieve.
Now, I'm aware, Matthias, that there has been, you've raised a number of rounds, I think. What would you tell us about the company's capital structure, an abbreviated history, perhaps?
Yeah, the company was initially founded in Ottawa, in Canada, and went through several rounds of venture capital investments with a mix of Canadian and U.S. investors. So, for example, the last round before I came in was done with Peakspan, which is a Silicon Valley venture capital and growth capital investor. And then when I was brought in, part of my role was helping to professionalize the business and also do a fundraise. And in that fundraise, we sold part of the business to PSG Equity, which is based out of Boston. And so that was a recap for the balance sheet and also was a partial exit for some of the early investors.
Now, you arrived in 2022, is that right? I'm wondering if when did the KPMG alliance occur? When did that arrive?
So I think we announced it beginning of 2023, but we started working with a company, I think in beginning 2022. Yes.
Something like that. What would the CFO be concerned about in forming a relationship like that? What was your contribution there?
So, and I can speak, KPMG really precedes me. So when I came in, it was already a customer, but I became part of the team that's actually working with a customer. And I think, at that moment, what I could contribute was, for a company like KPMG, it was quite extraordinary working with a fairly small technology business at the time. Right. At a very important part of what they do, like at least the audit part of right. KPMG. Of course, it's absolutely essential what technology they use and which products they use. And so certainly, I think me lending some more gray hair to the senior leadership, coming with some experience, having dealt with with C-level execs in my prior roles, I think I was just able to create confidence for KPMG that we were there to last, that we were a strong partner, and that we're continuing to going from strength to strength. That was really the first role I was playing.
Can you reveal to us again, once the MindBridge platform flags something that's high risk, a high risk entry, what governance steps would a CFO take to help keep the issues out of the business press? What do they do? Yeah.
Jack, it's a super interesting question, and it's a question that literally goes to the heart of what we learned years ago as we took this software that had this cool anomaly detection software that in the beginning we deployed and we developed for external audit once we took it into enterprises and once we started working with enterprises. It's exactly the question you ask is essentially will determine the ROI of our software and the value of using our software in the company. And that was really our journey. In the very beginning, we didn't have a good answer to that. And that was literally what and I come back to my earlier point when I said that in the startup, we had to learn to work with our clients and listen to our clients to actually, get faster to product market fit. I think MindBridge was much better at that. And we did work with our early enterprise customers and learned that they said, this is cool technology. We are early adopters. We get it, but it does not help us to have insights into problems that we can't solve.
Yeah.
And there is an argument to be made that even, having positive knowledge as a CFO or as a finance professional of problems that you have a hard time solving is a very uncomfortable place to be. So that was the first insight. And we said, okay, we really need to rethink how we build on top of that technology, out of that anomaly detection, a product that actually lends itself to rapidly turn that insight into action. And so that's partially a product. So now our product has been developed to be much better at indicating not what is just the problematic entry, but what is the pattern? What's the underlying problem? So I give you an example. We used to be very, very focused on the problematic entry because that's the mental model of an auditor, right? Auditors are really at the entry level. If I'm an operator in an enterprise, I'm not very concerned about the individual entry. So you telling me that there is a problem with an entry for a vendor is not as effective as you telling me and doing the analysis, here's a pattern with a certain vendor, right? Mm-hmm. And you do all that work for me already. I don't need to go and start looking at that one entry and then start analyzing what's going on here. And are there more from this? So what is the actual problem? So we started building our product out and analytics out to actually be much more pointed to leading you to that insight that then actually can be solved, to the problem that can be solved. And then the second piece is also change management, right? Us being able to guide our customers in the implementation, how they set up the software and how they set up teams to actually be in a position to take action. And so one way of doing that is, and with our biggest clients, that what we have been doing, I can tell you a few names. So we signed in the last few months, we signed Chevron as a customer, Colgate as a customer, Mars as a customer, JLL as a customer. So these are literally Fortune 1000, very large companies. And the change management aspect of it is the software we have built now, we call it a central insights factory for finance. We call it that way because I think it triggers in most finance professionals intuitively the right imagination and the right picture of what this is. And some of these customers, they build a team around the software. So they basically build a team that is operating our software on a daily basis, that is basically monitoring these financial flows, is pulling out the insights, and then also has the ability to actually action on them. But it is on us to provide insights that are very actionable. And the closer we are to who is that vendor that where we have problems with invoices, who is that, what is that payroll, that country, or that particular employee where we continue to make mistakes. And those would be the insights that then can be actioned on directly. And then they also have a direct top and bottom line impact, because ultimately, if we want to sell our software and create value, the buyers, which are our partners, they need to be able to show and quantify the ROI for themselves and internally in their businesses.
We want to, of course, talk to you about AI as well at MindBridge, and we're wondering just about the MindBridge finance function, how you might be using AI. And I'm sure it's in multiple areas, perhaps, but what would you tell us?
Yeah. So how to use AI in finance is what we work with every day. And so being our own guinea pig is really part part of the interest of my job being in a company that builds technology for my peers. And if I just zoom out, if you allow me to zoom out a little bit, I think
Sure.
the hiring currently is in MindBridge as a company. We did implement ChatGPT, we did implement Copilot, Microsoft Copilot, and this is very much around text-based tasks, right? I think large language models, they are amazing at working with text. I think everyone has experienced that, and they can really help any function in the company be more efficient. And we use it, and we have made it accessible. We also have an internal, like Azure-based platform for large language models, so we can safely use them in an internal setting. So that's the first thing. I think that's kind of almost like a no regret, no brainer move. The second thing is programming. So we have over 50% of our staff is in R&D. A lot of them programmers. So we're very, very research and development heavy organization. And I'm of course very interested as we scale, and we're basically running MindBridge break even. Is how do we get more efficiency out of our teams? And so using agentic IDEs, so AI-based tools that help developers develop faster is I think is the new standard. And the studies or the numbers that have been quoted or are being quoted are anywhere between 20% productivity increase to multiples to up to 2 or 3 times the productivity of certain developers. So I think again that's almost a no-brainer. Certainly, there's some complexities around, data security that need to be addressed, but that is a second piece. I think that nowadays, at least for a tech company, where there's a lot of value in using AI. And then the third piece is really in finance. We use our software on ourselves. This is very much also just to eat our own dog food, and we want to be, as a finance team, part of the product development process and be a sparring partner both for product and for marketing. So using our software, I do believe that in finance, large language models currently have very clear limitations. And so relying, and I see that frustration when I go, like next week, we're at the Gartner CFO conference, which is for us kind of the biggest show every year. It's interesting for me also to just talk to other CFOs. I think there is really a little bit of a disconnect between a lot of expectations around AI and finance and the fact that large language models are not very good with numbers. And so that's where machine learning comes in, or unsupervised machine learning. And that's what MindBridge has been built on since 2015. Machine learning is it's very highly deterministic. Large language models are not non-deterministic by definition. It's a problem, right? So large language models are very well suited for numbers, and so I think the future really lies in the combination of both. The core analysis clearly needs to be done by machine learning, and then LLMs are a great addition to that make it possible to build products that are much easier to interact with. And so long story short, in MindBridge, in the finance department, we use our own software because we currently find that is really what is built best purpose built for use with financial data.
What, just upon that allocation of dollars to AI initiatives, are there metrics, which metrics matter most to you when evaluating the success of AI initiatives?
Yeah. So ROI, determining the ROI of AI in a company is a super hot topic. And it's probably, I think, the number 2 questions that every CFO has been asking for the last few years is, what are the use cases where I can actually use AI and it really works?
Yeah.
And second, what's my ROI on it? And unfortunately, especially the answer to the second one has always been a slightly unsatisfactory one in many cases. So using ChatGPT for text-based applications in a company, I think it's okay to accept that this is the future, that there is a lot of productivity gains, that you will, that's very hard to put specific numbers on your productivity gains. You can probably do it. But I think it's fine to accept. For me, it's fine to accept that there's a lot of value, and the cost, while it's not being cheap, it's I think it's a cost that can be assumed, or it's easy to assume that productivity gains are simply there. For development, I think I'm more interested in the numbers, and it's something that actually can be measured, right? There's different ways of measuring productivity and development teams have done that and are doing that, well before there was AI. So you can actually measure how many story points, for example, or how quickly the certain tasks or the way the tasks are organized are actually being delivered. So there is a quantified way to actually measuring that uplift. And then for tools like MindBridge, and I come back to us because it has been a big part of what we needed to learn and work on with our customers, is also how do we actually measure ROI of your tool? Because, and that very much resonates with me. I'm the first one, to ask for clear ROI on tooling from my peers. So I cannot be the one who's implementing costly tools and not have that at hand or not develop that for my own tooling. And so at MindBridge, this is very much, we've done a lot of work around value engineering and actually understanding how our tool impacts certain, we call them use cases, and what's the ROI on our use cases. And now we're actually at a point where we have built, we call it a Use Case Navigator, which is an easy way to approximate usually it's savings or top line impact that the deployment in a specific company can actually deliver.
Well, Matthias, we are up to our finance strategic moment question, where we're going to ask you to look back and share with us just one moment of insight that you've experienced during your career. Where are you taking us? What comes to mind?
So I think it's less of a moment of insight, but it's reflecting. It was a behavior or a pattern of my behavior that actually helped me be successful at IONOS as a CFO. If you would ask me what are core skills that make you better as a strategic CFO, I don't think it's specific technical skills. I think they are taken for granted. You need to know, how to do what's typically considered the core task as a CFO. Of course, you need to understand, sufficiently accounting. You need to do treasury, tax, all these things. But that's not where you differentiate yourself. It's a given that you can do that. Where you differentiate yourself is really where you as a CFO can help having top and bottom line impact on your business. And if I reflect on what actually does make you better as a strategic CFO who can really drive value, I think it's three things. It's you need to be, the better your understanding is of the business, and the deeper your understanding is of the business, the better you will be at it. And that brings me back to my journey, where for a long time I thought my journey wasn't very conducive to being a good CFO. I now think actually a lot of these things I did when I learned about what my colleagues were doing are now very, very helpful for me to just be a very good partner to them. I understand better what they're doing. I'm better at problem solving. Yes, I'm the guardian of and the steward of our resources. But the tension I have is I need to keep our resources under control. But at the same time, I want to enable my business, my partners to be wildly successful. So how do we do this? And I'm in a better position to be a creative problem solver together with them as we, deal with the typical resource constraints we will always have. The second one is building cross-functional relationships. I think that's absolutely key. And the third one is building effective teams. It's a very global point, but I'm, the more senior and the more experienced I get, the more I just, believe in the power of building strong teams. So having said that, I think that moment of I think strategic learning I had is when I joined IONOS, a lot of the finance functions in the beginning were still in a shared service center. Over time, we moved them over to IONOS because we were preparing for the IPO. But a lot of them were in this shared service center, and the collaboration wasn't working very well. And it was really to the detriment of effectiveness and the quality of a lot of the responsibility or the tasks that were in my responsibility. And the key to solving that was investing in those relationships. And so what I did at the time was I got myself an office. They were at a different location. I got myself an office. I would spend two out of 5 days a week on site. I would spend a lot of time working with my counterparts that were running tax, that were running accounting, that were running compliance, that were running project management, and understanding how they were doing business, making them understand where I wanted to go, building a relationship, and just showing them that I understood or learned about the problems they had, thought through with them how we could build solutions, and ultimately I think that led to a very fruitful collaboration and ultimately a company that was very well prepared for the IPO.
When you received your first CFO appointment at IONOS, I suppose, what is the piece of advice you'd go back in time and give yourself? There must have been something about that role. Again, you were quite a business strategist, almost more a generalist than a focused finance leader. Tell us something about what's the piece of advice you'd give yourself, if you could.
So this might be very specific to my situation and my personal journey, but I can tell you about the almost fatal mistake I made in the first 12 months. So I came in. It was a new business. It was a new industry. It was a new role for me. I had never run a finance function of that size and complexity. It was new shareholders, and it was a finance function, especially around the controlling team, that really, I would say, needed to be reconfigured. It wasn't very effective. It was very large. It was ineffective. Very bad, with a very bad employee satisfaction. And so I really needed to rebuild that finance function. And the mistake, and I think we went about it with my team in a very structured way. And we put a plan into place. We discussed where are we today? Where do we want to get to? We put I think 5 or 6, initiatives from culture, processes, team, technology, analytics, what we wanted to do. And here's my mistake. I did not communicate well enough with my board. And so I left what I should have done is communicated regularly what that plan was, what was the outcome I was aiming for, what I had found, and what were the steps and when they could actually expect to see results. And I didn't do that very effectively. So in those first 6 to 10 months, I suddenly found myself under a lot of pressure because there was pressure. There was a lot of expectation from the board. Not everything was going as planned after the investment. During the time, I worked with 3 CEOs, so there was quite a bit of turnover. There was an investor who probably was a bit nervous and not exactly excited from the get-go of the performance. And I did get under a lot of pressure. Where are the results? And ultimately, the results, I think, started to be visible to the board about 10 to 12 months in. And I think that's what basically saved me, that the board suddenly and the investors and Warburg Pincus suddenly said, well, we really see now how things are coming together. We see a lot of improvement. And then they started to gain a lot of confidence in what I was doing. But I really made that mistake of not being much smarter about how I communicated the journey I was on. And I think putting myself at risk at that point.
Matthias, I'm sorry we're running a little long. I've got 2 more questions for you. And hate to put a time limit on this, but we always like to ask our guests to reflect a little on the personal side. Is there something your colleagues might not know about you, something, an interest that you have, some other sport that you pursued perhaps sometime in your life? I don't know. Anything you can share with us on the personal side?
Yes, I can. So I don't think everyone knows that I'm and I have a career as an avid home brewer. And I think I have never been featured in a book minus a book on the best home brewers worldwide. And so I've been featured as the German representative, which is very humbling because I'm featured among I think the U.S. National Homebrewing Champion, the Canadian National Homebrewing Champion. I never gained any championships. All I did was brew some decent beer, but that's probably one of our private achievements that's not on my CV.
Did craft brewing take off in Germany? Something I remember that it was difficult there because the brewers are so strong and sort of entrenched.
Absolutely.
Yeah.
Like craft beer as in general, the whole industry, but then also craft brewing and home brewing.
Yeah.
North American market and it used to be way ahead. So when I started in 2010, it was quite unusual to do that. I think the market has come a long way, and very much inspired by I think the U.S. market.
Yeah.
Nowadays, there's also a ton of like craft and microbreweries around, and the beer styles that are being brewed by craft brewing beer styles have become much more common. But at the time, it was, and that's really on the back of the German beer industry, who has been very, very good at brainwashing all of us in believing that the beer they produced was the best you could ever wish for, which is clearly not the case.
Yeah, well, but it was a high benchmark there to meet. Hey, we're up to our final question. We'd like to know what your priorities are as we go forward the next 12 months as a CFO. What would those priorities be?
Yeah, so we are very focused on execution right now. I think that's, if I think about challenges and risks that you always have, it's very much executing well. And so I'm really supporting the teams in allocating resources, in planning resources, also in tracking our progress towards the targets that we have, either be targets that we have internally based on our business plan versus targets we have agreed with customers. So that's an area where I'm very involved right now in order to make sure we have the right way of tracking knowing whether we are on track, so we can react in time to fix any gaps that might open up.
Matthias Steinberg, thank you for joining us on CFO Thought Leader.
Thank you very much, Jack. It's been a pleasure.